My name is Daniel Lee. I'm the Senior Vice President and Banking Manager at Hanmi Bank. I think cash flow is used sort of loosely. So if I could explain it this way, I think cash flow, at least in terms of banking sense, it's the inflow and outflow of cash. So, businesses need to know, hey, my cash is going in and going out. And so when we talk about, hey, is your cash flow positive, negative, and so forth, it depends on the timing and so forth. But when we talk about how profitable your business is, that's more of an income statement where we look at how much cash income or loss you've made during a certain amount of time, taking care of all your expenses and so forth. So cash flow is, the inflow and outflow of cash. So the balance sheet measures the amount of assets. And so if I could think of assets, everything your business owns, as well as all your liabilities, meaning, the debt or even accounts payable, as well as how much equity you have in your business at any given time. I think one thing that a lot of businesses think about, so to expand even further, they think about the balance sheet and say, hey, I have $50,000. I should do well. But, will that $50,000 cover all the items that you have to pay, regardless if you sell anything? Those are considered fixed costs. So regardless of you selling one single item, will I still have cash to support my business to continue, like rent, salaries, insurance, taxes? There's a lot of obligations that I think business owners realize, and I'm sure you'll find out too when you talk to them. I have all these expenses and I haven't even sold anything, right? And so the balance sheet will help you realize, hey, these are the items I have relative to how much liabilities I have at any given time. It's a juggling game at times. If you have a lot of cash, it's really easy. But if you don't have a lot of cash, you will try to not pay certain things. But our advice to any business owners, obviously, like payroll tax, sales tax, obligations that you have on either a monthly, quarterly basis, pay them. I think, overextend or exaggerating your revenue, underestimating your expenses. Businesses will obviously, when I talk to a lot of businesses, they'll try to come to us and give us the best case scenario. Hey, I'll make this kind of funds. And so we'll start looking at their expenses and analyzing that and, just give a realistic approach. I think making obligations in a timely manner is very important because that affects your credit rating, whether it's personal. I think everyone, whether, your credit cards will look at that as well. And there's agencies out there that give you a credit rating for your business, maybe even unbeknownst to you. There are credit agencies out there for businesses, and a lot of financial institutions, we will even do sort of like a secondary search. We'll ask for your bank statements. Oh, did you make all your utilities on time, other type of obligations, just to see, again, sort of try to measure how capable you are or what's the likelihood of you making obligations if we do extend credit out to you. I think, obviously, equity, typically there isn't a payback, right? That means this is the capital that you have to use typically freely to operate your business. It all depends on how, quote unquote, involved. Obviously, friends and family, they probably will not put as much restrictions on you to give you money and say, hey, hopefully you do well, pay us back and so forth. now you could always find outside investors, which is equity, and they will own a certain percentage. So whenever you do make, let's say, net profit over a certain time, they want that percentage back to you. But still, there is usually not a clear-cut obligation to pay back quickly. Prime example, I'm sure many of us has watched, I like watching it, is Shark Tank. They approach someone else, hey, here's my business model. I do this in revenue, and can you invest in my business for a certain percentage of ownership? And sometimes even those sharks will say, or those investors say, no, I want to give you debt instead. And so what debt is a legal contract now where you are obliged to pay back depending on whatever the contract says. So simply, let's say, for instance, if it's like a car, I think most of us has an auto loan, you have to pay monthly payments, or there is a consequence if you miss a few months, right? And so forth. So that's easily explained. Credit cards, you have to pay minimum interest. If you don't pay, or if your balance starts going up there, they'll increase the interest rates or something. So there's all these contracts and obligations that you have. Unfortunately, when you first start off, debt tends to be a little bit more expensive just because you're a higher risk. Obviously, risk equals rewards even for the investor or the banks. Because we're taking a chance on you, pricing will probably be a little bit higher and so forth. But we will obviously talk and discuss how will you be able to pay us back or pay TMC back and so forth. Personally, I think the number one thing that you should consider is your cash position, sort of like having cash for a rainy day. With the unknown recession, do I have enough funds to help out in case some obligations come up that I was not expecting? Businesses that have weathered through these tough times, especially we've all gone through tough times during COVID, the government try to help, with all these programs and so forth. But a lot of these companies who are able to weather it out is because they have reserves. Now, if you don't have reserves, I think you should start looking into, again, talking with banks, other companies for line of credits, sort of like a larger credit card, and trying to find, other opportunities, as mentioned, for your expenses, your vendors, as well as potential clients. Obviously, to say it in a very, I guess, simple way, we all need to hustle for your business, trying to figure out, hey, what do I need to do to keep the lights on? And so, I'm sure as a business owner, you're always thinking about these things. Hopefully, again, the complacency doesn't come into play, and you're always trying to figure out, hey, what can I do to improve it? As well as, hey, if I'm a little concerned about the uncertainty, recession, you hear about that coming next year or even sooner now. What can I do to, mitigate or lessen the, what's going to happen to my business during those times? And so I think always analyzing sort of what we've already discussed, the projections and comparing the actual versus budget. Every business should be doing that. Definitely have good people around you, ultimately. It's hard enough to do it by ourselves, but if you have a team with you, I think it makes it a little bit more easier, right? And to always bounce ideas. It's always great to have a second opinion. Obviously, you as the business owner will make the final decision, but it never hurts to hear what other people say. So that's my final, I guess, advice to you guys.